before we let our panelists introduce themselves, just want to take a quick show of hands in the room. Is anybody here employed or has been employed in their career in the financial services industry? Probably about 10, 15 hands. That's pretty impressive. So Bitcoin's a big trend. Everybody knows that at this point. But on the front lines within the broader financial industry, you still see a lot of hesitance and I guess slowness to adopt. But that show of hands here is really neat to see that there are people taking that seat on the cutting edge and helping move this movement along. So I think that's what we'll get through today, is how Bitcoin is being adopted in the broader capital markets, and how that is going to change the way finance is done, hopefully, not just locally or in the United States, but in the world. So with that in hand, I'll hand it over to our audience to do some quick introductions. Let's start with Andy Edstrom.
All right, thanks, Matt Dines. Andy Edstrom, first decade Wall Street, Goldman Sachs investment banking, private equity for a fund that spun out of the Carlyle Group, and then invested for a hedge fund that got bought by the big beast known as BlackRock subsequently. Second decade for me has been wealth management, and caught the Bitcoin bug in 2017. Published Why Buy Bitcoin in 2019, which I think it's definitely the first Bitcoin book published by a financial advisor. It might still be the only one. I think Morgan Richard at least is going to put one out soon. And CFA, CFP charter holder, and I helped Swan build a product for financial advisors. And currently I'm helping OnRamp serve the financial advisor industry as well.
Good morning, everyone. Andrew Hohns. I am the CEO of Newmarket Capital. We are about a $3 billion structured finance asset manager on behalf of institutional investors, pensions, sovereign wealth funds, insurance companies, similarly situated investors. We founded Battery Finance in partnership with 1031, which is focused on developing and managing a series of value-added investment products built on and around Bitcoin, variety of kicking off with credit and lending solutions. I'm happy to give some examples over the course of the panel. My background has been 25 years in securitization and institutional asset management.
Hi, everyone. Jeff Walton, Punter Jeff on Twitter. Happy to be here. Thanks for having me. I have spent the last decade as a reinsurance broker. For those that don't know what reinsurance is insurance for insurance companies. And so my background in reinsurance and insurance is very tied and correlated to financial capital markets, what's going on with interest rates, what's going on with primary insurance rates, how the whole kind of financial market works together as these insurance companies and reinsurance companies allocate their capital to manage their future liabilities. So I've got a unique lens into the financial world and how the financial world thinks about assets and liabilities. And from that, I've also developed a pretty robust analysis on MicroStrategy and their potential valuation based on their strategy in holding Bitcoin. So
Awesome. Well, I'd like to get a discussion topic seated here, but first, before we do that, I'd like to touch base with the audience. We have about 25 minutes where we'll have a conversation. After that, we're going to have 10 minutes of live Q&A. So hopefully we have some hands come up there. Think of your questions at the back of your mind, but just wanted to let everybody know that there will be Q&A for direct questions. So the seating topic, to get a discussion started that I'd like to launch with, is what at first might seem like a bit of a paradox. So the financial services industry occupies a kind of a unique position of trust within broad society, and that it's really at the core tasked with allocating everyone's savings into productive endeavors, so investment, new projects, et cetera. And that position of trust, right, I think is key. I don't think anybody would disagree to say that over the last 15, 20 years, the financial industry has eroded a lot of that trust. And at the same time, you've seen in 2008 the arrival of Bitcoin, which at its core is a ledger money where economic participants can join and interact with each other and align without any trusted third-party intermediaries. They can essentially trust the network without requiring trust to begin with. The question here I'd like to maybe get us started with is you see these two different kind of worldviews and a new technology enter the scene. It's been 15 years now. The adoption, people, maybe some of us say this should be happening faster. Why is it not? Bitcoin's $70,000 on a price tag. Why is it not moving sooner? But I just wanted to get that initial discussion going about from your unique swim lanes within the financial services industry. How have you seen Bitcoin change, both on the individual level and maybe the objectives that this financial industry is really setting out to deliver for the rest of us?
All right, I'll start. Bitcoin is a fraud. Bitcoin is for criminals. It's black market money. It's a Ponzi. These are the comments I was getting from my clients in wealth management, back in 2018, let's say, 17 and 18. I barely, I was talking with some of them in 2017. By 2018, I was really more focused on it. And then by 2019, I was writing about it. So have we come some distance since those comments from those clients? Yes. And yet, all of this stuff takes time. So, thanks to the mainstream media, I guess, thanks to the fact that some of the most amazing, sensational stories about Bitcoin are about 2012, 2013 era, right? When it really was the Wild West and there really was a lot of criminal activity. And so that's the story that's lodged in people's minds. It's lodged still in the minds of some of my clients. Now, having said that, we have lived through, since then, almost 2 full cycles in Bitcoin. Cycles in price, I'm talking about. And so there's a big difference I find with people having paid attention from some year, some date, some moment, seeing a full cycle, seeing 2 cycles, seeing it not die, and then starting to think about the government debt, the rate of the deficits, all the money printing. So I think we made great strides. It's still a mixed bag. You might be shocked at, what percentage of my client base still doesn't get it or still thinks, it's doomed, basically. But for sure, it's been slowly but surely making progress, one mind at a time, one hand up at a time, right? We saw how many people are in finance and are here. So you're doing the right thing, and that's my perspective.
So the lens that I have is from the insurance and the reinsurance world. When I think I alluded to it, when insurance companies and reinsurance companies are pulling in capital via premiums, they need to allocate that capital to future liabilities. With the development and the creation of the Bitcoin ETF, it offers an institutional grade asset where these insurance and reinsurance companies can potentially have easy access to putting Bitcoin on their balance sheet. Why is that important? Many of these insurance companies use modern portfolio theory and look at Sharpe ratios of different assets, meaning that with the addition of a new asset with a different return metric and a different risk metric actually improves the overall economics of your entire portfolio. So in my mind, from my point of view, if insurance companies or any asset allocator from that perspective is subscribing to Nobel Prize winning modern portfolio theory, then it's only a matter of time before they start looking at this alternative asset that's now 15 years old and start to think about how it could be used in conjunction with their portfolio to meet future liabilities. In addition to that, I've also seeing companies like BlackRock that are coming out with this strategic income opportunities fund. And there are funds like this that are created, filled with bonds, and they're adding Bitcoin to these portfolios for these institutional asset allocators to get some Bitcoin exposure within these kind of dated bond portfolios. So that, in conjunction with MicroStrategy and other Bitcoin-related equities being included in index ETFs, I think these are the Trojan horse vehicles where many of these institutions are going to start getting Bitcoin exposure without even knowing it, and I think it'll start to develop and expand over time.
I smiled at Jeff's response because, well, first of all, it's a pleasure to be sitting next to Jeff, who's one of my favorite follows on Twitter with Quampros, and the commentary that you and Ryan are doing on MicroStrategy is amazing, and a pleasure to be with you, Matt and Andy, as well, but you guys don't have the same Quampros show. No, but I was smiling because, for a lot of the financial professionals, this really is an existential question. You have a 9.24% compound annual growth rate for the funded federal debt in the United States in the last 5 years. I see every indication that this is going to accelerate, not decelerate. And if you just use a 7% monetary depreciation factor, $100 million invested in a fixed income instrument in 10 years actually has depreciated to $50 million in today's value. So that's a 50% loss that's baked in the cake. And when you have a major pension, sovereign wealth fund, insurance company that has 30%, 40% of their asset allocation in fixed income, it becomes potentially extremely destructive to not incorporate inflation-aware strategies, and Bitcoin, of course, is a tremendous approach, not just because it's defensive in terms of being finite, scarce, immutable, transparent, everything that we know it is, but also because it's poised for very interesting use cases in terms of technology and all the different industrial and commercial applications that are being built on Bitcoin. But the question you asked, Matt, was, what's happening in financial services today? And I can just give a perspective or two. The first is that I would say that institutional dynamics are critical. There are very few institutions where Bitcoin is considered to be a legitimate tool that could be utilized for its benefits in structured finance or any finance transactions. And, it's sort of like verboten. No one shall discuss this B word. And I remember a few years ago, there was that conference online that Elon Musk, Cathie Woods, Jack Dorsey, and it was moderated by the individual from, I think it was PayPal or Square, Square's Bitcoin adoption team, I can't remember his name, and it was called the B word. And that really hasn't gone away in major financial institutions. There are a lot of people that haven't really, Bitcoin's fascinating. I don't know anyone that's looked at it for, pick your time frame, 2 hours, 4 hours, 10 hours, that hasn't walked away incredibly fascinated and extremely inspired, bullish. I know millions of people that haven't looked at it that are completely dismissive, right? And so you have to bear in mind that that's the starting position that a lot of us are beginning with. But I'll just share with you, as somebody who's worked in structured finance for so long, I feel like so much of my work over the last 2 decades has been about solving puzzles. How do you fit something into the regulatory framework, the tax framework, the legal framework, the market framework? And when you're done, you're like, aha, I solved it. But with Bitcoin, it's more like working within a natural law. It's like its own element. It has its own attributes. Gravity doesn't respect what the regulator says. It's just gravity. And when you're working with Bitcoin, it's really, you have to reorient yourself. It's financial engineering, not financial optimization. Engineering in the sense, how do we get this plane to fly within the context of the thermodynamic properties and the other properties of the money. So it's a bit of a mindset shift, and one that I think would benefit from a lot more embrace on the part of financial services, because there's a lot to be gained.
Those are a lot of great points and feedback made. Andrew, I like what you said about just gradually changing minds, as there's still a lot of resistance, a lot of doors closed. And when you're meeting with investment committees, C-suite executives, it is still surprising, I think, in 2024, where you hear things like Bitcoin has no intrinsic value. We don't think Bitcoin will be around for the long term, things like that. And then Jeff, your work as well, showing demonstrated success with a company like MicroStrategy, with a corporate strategy, leaning in to adopting Bitcoin on its balance sheet, and by all measurements, thriving as a public company.
Can I make one comment in this vein, though? In contrast, I'll say one thing. Here where we sit in 2024, almost every financial firm of any size has at least one Bitcoiner. And so, yes, it's early. Yes, Bitcoin doesn't have much of a purchase yet on your average financial firm. But you've got at least one guy, usually it's a guy, in that organization, right, who holds the asset, who understands the asset, who sees the opportunity. And moreover, you're getting more and more senior level folks, managers at these financial organizations that own Bitcoin. And they may not be all in Bitcoin, but more and more of them have significant sizable positions. And so when I look to the future, we just kind of did the gut check on where are we today, and why the heck has this taken so long? We've been here for a few years now. I'm very optimistic because Bitcoin has already infiltrated. It has already gotten its claws into, one or two or several individuals, I think, by now in most sizable financial organizations.
Yeah, I'd like to add on to that. I think generally the base effect of how people think about math and scale really gets most people. So what I mean by that is right now, the price of Bitcoin is $69,000. It's less than a Ford F-150. So, but if you think about market cap, it's the 9th largest asset on the planet. If you think about it as the 9th largest asset on the planet, wouldn't you want to know what it is? Wouldn't you want to be curious and start to look into why it's the 9th largest asset on the planet? And I think we might see this kind of sea change once the price of Bitcoin maybe goes above the average home price in the United States, above $400,000. People may, stop and think, maybe I should, be curious about this and dip my toe in the water. So, I'm bullish from that perspective, that just the base effect of how they view numbers.
Let's hope that the average home price by then is still $400,000.
No, it's really sad. It is. And this gets to the point, both Jeff and Andrew Hohns mentioned about the national debt. And to tie that back to where we started here today, the role of the financial services industry at the end of the day is a position of trust, right? They're entrusted with properly and correctly allocating society's capital and savings into the right projects and endeavors. And when you see the default option, right, of the national debt problem that Andrew gave those statistics on, and I think everybody in this room, acknowledges it, Bitcoiners are, in my experience and opinion, some of the most aware people of what's going on and the problem. But the flip side of Bitcoin, I believe, Bitcoin's core purpose was labeled very clearly in the Genesis block. It's chancellors on the brink of second bailout of banks. So the story's been the same from the get-go. But from your perspectives and how you interact with your fellow colleagues and professionals in the industry who are tasked in that position of trust, do you still see I guess the ignorance and lack of curiosity to lean into Bitcoin from a lot of people in the industry? But is that paired up with, at this point, a lack of awareness or acknowledgement of that same debt problem?
I mean, we've all been living in this environment where in the United States, Alex Gladstein refers to it helpfully, part of the golden billion, euros, yen, sterling, dollars, And here the inflation has been higher recently, but not that high, actually, not compared to Argentina, Vietnam, Nigeria, many places around the world, Turkey. And we have access to this supermarket of financial services, stocks, bonds, certificates of deposit, 30-year mortgages, 5-year car loans, credit cards with points. If you compare that to an individual elsewhere in the world, they really just don't have those. How does someone in Malawi save? Either livestock, sheet metal, or paper money. And so if you have a phone with an internet connection, you're not thinking, how can I buy Apple? Right? You're thinking, oh, I can actually buy Bitcoin, and you're afforded the same degree of security on the network, access. It's an egalitarian system for whether you have, a small amount, a medium amount, a large amount. It's the same structure for everybody. That's a remarkable situation, and I think that mostly we haven't really perceived that yet in the United States, although more and more, of course, you see stories, everywhere about people being concerned about inflation. Although the thing of it is that in a heavily indebted society, inflation also diminishes the cost of older debt burdens and makes it easier to repay. And so if you actually look at presidential elections for the last 100 years, in inflationary periods, astonishingly, incumbents are more often than not returned to office rather than not. Now, we'll see what happens here. And I know that the Bitcoin voting community is very passionate about this upcoming election for good reason. But it is, it's just to say that, and I'm sure you've been to the National Debt Clock and a website, and there's a great mobile site where you can take a look at that as well. And the numbers, they just race. They're incomprehensible, right? And it's not the Democrats, it's not the Republicans, it's both parties working in concert with one another who have increased the debt tremendously from $1 trillion in 1981 to where we are right now, almost $35 trillion, and that doesn't include Medicare, Social Security, the underfundedness of the state pension system across the country, and Fannie Mae, Freddie Mac, Ginnie Mae, et cetera. And so the direction of travel is more inflation, and the money illusion is hard to overcome. But Bitcoin is remarkable because it offers an escape valve, escape hatch, for the first time in human history, that's accessible and not costly and not burdensome to store and not conspicuous and does not decay. And so, I think it's a really profound opportunity for people right now, especially people that are having a hard time saving in dollars. This really reframes the incentives. And we are 844,000 blocks into it. It has a really proven track record at this point. And I think the future is very bright, that's for sure. But it will benefit somewhat from demystification. Most people are still resistant to Bitcoin. You're fighting against a really big megaphone of mainstream media that doesn't really know what they're talking about. They're just, parroting kinds of believable things, because we've all been told these major mega crises, polycrisis, Bitcoin being responsible for most of it, boiling the oceans and everything else. And of course, nobody wants to boil the oceans. And so it's easy to write a story about that because it's invisible. It's hard to perceive until you've actually taken a few hours to look at it. And then even still, you can take a few hours a day for years and not understand it fully.
Let's go back about a minute ago, and you were, I like what you were doing there, Andrew, talking about the positives, the very bright future that Bitcoin offers. I think there's a lot of awareness in this room amongst Bitcoiners about the problem in finance, in the dollar, in the public debt, but there's also a lot of hope, and Bitcoin offers hope, as someone very popular once said, that Jeff covers. But let's end on a high note. I think everybody within your specific swim lanes within the financial industry, going into legacy finance, capital markets, being on the front lines, what do you all see that you're most excited about for Bitcoin ultimately changing and reshaping, hopefully, the financial industry for the better as you know, America moves forward and the world moves forward? What is going on, I think, in your opinion, that you're seeing on the front lines?
I'm happy to start with that one. I hope that my job as it exists as a wealth manager today, I'm not going to say goes away, but let's say shrinks. You know, there's still many important value-added activities that advisors who manage people's assets, their wealth, can provide. You know, financial planning is a real thing. It's an important thing. Anybody who cares about their future, cares about the future of their family, cares about their kids getting taken care of, you know, has to live within a system of taxes and the U.S. tax code, or whatever jurisdiction you hail from. That's going to be around for a while, in my opinion. And so, however, I will say that I am excited and interested to watch Bitcoin take a bigger and bigger bite out of the financial industry, and specifically out of my industry as it relates to managing wealth, because I think that just staying ahead of the inflation from a return perspective, already it's gotten harder over the last decade. You know, it's a pretty tall order. If your idea is that you're going to own stocks and bonds and real estate and maybe some commodities and outperform inflation handily, you know, my belief is that's actually going to be pretty difficult using normal traditional assets. So I'm excited that Bitcoin is going to play an increasingly important role, higher percentage of the portfolio. It's likely to drive performance in the case of a lot of people's portfolios. And I'm frankly hopeful that it makes managing diversified portfolios easier and simpler as the fixed income elements start to fade away in importance, and the world's best hard money asset becomes more and more important.
Yeah, I'm excited for Bitcoin kind of infiltrating corporate financial world, beyond insurance companies into publicly traded equities, even private companies, and the future development of what can be built on Bitcoin rails, right? Like, I think there's probably going to be a world of lending, which you guys are all working on, lending on Bitcoin rails, insurance on Bitcoin rails, and even decentralized IDs and other future products that we don't even know of yet that will be built on and using Bitcoin rails to make a better and more hopeful future.
I would say that I'm most excited about Bitcoin's ability to realign community capital with individual ambitions, and to improve dramatically the alignment of incentives as between borrowers and lenders. What we have been working on is a series of lending instruments that combine small amounts of Bitcoin with large amounts of traditionally financeable assets, like small business loans or commercial real estate or mortgages. And by combining the two, you can provide lenders with a much more inflation-resistant instrument, and at the same time provide borrowers with the ability to achieve their long-term goals, because not everybody can finance a long-term goal with an upfront amount of invested money, right? There are many things, buying a car, a business loan, working capital, a house, that you need 5 years, 10 years, 20 years, 30 years to pay off. That's not going to change. But imbuing those structures with some amount of Bitcoin can dramatically reshape the outcomes for all parties. And I think that as those products grow, we're going to see not only much more wholesome, if I could say, structures for borrowing and for making capital investments, but results that also produce inflation-resistant returns for institutional investors.
Awesome. So we're going to shift to Q&A, but I want to say one last thing, final thought. I'm going to tout Andrew's book here for a reason to be hopeful. I've gotten to know Andrew very well over the last year or so as one of the small handful of people trying to reframe Bitcoin's role in this dollar credit bubble, if you will. But Andrew's working on a project to infuse Bitcoin into real estate. And when we were in Philadelphia a couple months ago, I got to see the sites. I got to see the city for the first time. And, it's a city like almost every other in the United States, extremely proud and rich of just think about the houses that our parents, their grandparents, et cetera, built over several generations. And in a city like Philadelphia, I mean, you have some homes, that date back maybe 3-4 centuries, like seriously, really impressive, heritage sites. But you also see, Victorian just homes and architecture from maybe 100 and 150 years ago. And what's happened is, I mean, you've seen over the last 50 to 70 years, as we've shifted monetary policy in this country, people couldn't afford the upkeep on those homes. And so in some sense, we are, as a country, eating our seed corn. These things of beauty that were lost over the last 70 years, they're in distressed and dilapidated condition. And I think the hopeful thing is things like Andrew, and Jeff are doing are, in my opinion, going to bring that back on riding on Bitcoin. All right, sorry to interrupt there, take up 4 minutes, but I think that's a very exciting thing to be hopeful about.
Thank you, Matt.
So let's open it up. Any questions from the audience?
Round of applause for these guys, please. I have a very self-serving question, and then we can get to the audience. For those of us in the Bitcoin mining space, financing has been quite a challenge. It's been looked upon like the cannabis businesses early on, and financing is not something that's super common or easy to attain. Do you guys see any financial products coming to the mining space specifically?
I would say mining is a really hard business. Thank you for what you're doing. It is playing an incredibly important role in preserving the network, misunderstood role. I'm really hopeful from a mining finance perspective that miners are going to begin to be recognized for ancillary services as well, such as waste heat reuse, other kinds of wasted energy recapture that's already happening, providing microgrids. That doesn't necessarily pertain to every miner everywhere, but I think that more and more where you can add additional sources of credit support are going to facilitate financing, because it's a very hard business, and that I think is unlikely to change in reality. But the good news is that the next 18 months should be great, because the CAGR of Bitcoin price is very likely to exceed the CAGR of the hash rate of the network. So from that vantage, it's a good time.
As a MicroStrategy, as a company, has it redeveloped its brand? What's the future for it in terms of what it actually does?
Whoa, what's the time horizon, right? You could go out 10, 20, 30 years, it could look very different. I think over the next decade is probably going to be pretty static, that they're going to keep stacking Bitcoin in perpetuity until they can figure out the most efficient solution to potentially earn a yield and how to utilize their Bitcoin in the new financial world. Given that they have 1% of the Bitcoin, 1% of the Bitcoin period, I think I can imagine a world where they are the bank of the future. So they are helping facilitate liquidity within a market that doesn't have much Bitcoin liquidity 10 to 20 years from now, where the new mining supply is a mere fraction of what it is today.
I think that a Bitcoin development company has got to be just that, a Bitcoin development company, which is active in the various areas of Bitcoin and not just hoarding Bitcoin. I mean, that's, I can understand not wanting to sell it. It's a very powerfully appreciating asset, but you should want to do something with it, right? We all have actual terrestrial time constraints and ambitions and desires for the world. Bitcoin is immortal, but humans are not. And so thinking about how can we utilize this additional purchasing power, whether it's as a corporation, individual, family, I think is a really relevant question. And for MicroStrategy, I personally hope that they will play a leading role in supporting Bitcoin companies across the ecosystem. People will need Bitcoin. Bitcoin is digital scarcity. They can lease it. They can lease it in digital form. They can lease it in physical form. They can invest in companies that are developing new areas. And really, Saylor and his colleagues have an exceptional vision of Bitcoin's properties. And personally, I'm looking and watching to see how they execute on some of these tangible objectives within the quote-unquote Bitcoin development company lens.
All right, so I'll counter slightly. Given what was said, which is that they got 1% of the coins already, and obviously Michael Saylor has probably the biggest microphone in Bitcoin, I would like to see MicroStrategy support Bitcoin, but no more than is actually necessary. Because I think any one single company, which is effectively run by a single individual, can do great things for Bitcoin, but also can be a point of risk. So yes, MicroStrategy and Michael Saylor, I hope, will be responsible Bitcoin citizens. Yes, I would like to, at the margin, see them do positive things to help build the ecosystem, but I personally don't want to see them, moving farther than is necessary and extending their influence excessively.
Great.
We can fight in the parking lot.
Yeah.
What do y'all see as downstream effects of a Bitcoin standard on financial markets? For example, there is a lot of liquidity under a fiat standard. Do you think the private equity industry will shrink and companies will have to go public faster to access more liquidity in public markets? Also, what do you see as the role of passive under a hard money standard? Because I suspect it's an investment fad that is acting as a store value substitute.
I think that Bitcoin is really going to change a lot of industries. Eddie helpfully kicked off the conference with Bitcoin as gunpowder money, and those who embrace it earlier have huge advantages. Private equity companies, venture capital companies that integrate Bitcoin into the financing package for a leveraged buyout, they will benefit. People are always focused on providing founders with equity incentive compensation to keep them to stay in the startup for a longer period. It vests over 3 years, 5 years, 7 years. If you have a pool of companies in your portfolio and you are a VC, providing each individual half compensation in their company and half in a pool of Bitcoin, that could be incredibly incentivizing and get people really to, so there will be ways that Bitcoin is tactically integrated into different structures, whether it will result in major changes in terms of price to earnings ratios. Price to earnings ratios are going to be under review for the next 5-10 years because they're really based on the implicit assumption of inflation. When you say that Coca-Cola is worth 30 times, you're making an assessment as to how much the dollar's worth in 10 years. So Bitcoin will have a role on that. We could certainly continue over lunch.
Let's do it over lunch, guys.
Well, really quickly, it's totally different. You're going to have fun, I promise. Let's say you have the ear of the soon-to-be state treasurer of the state of Oregon. What is your elevator pitch to put Bitcoin on the state's balance sheet?
Bitcoin solves your pension problem. Good night. Let's grab some lunch, guys. Thank you. It was a pleasure. Thanks, Eddie and Eric.